Well, Rob, we lost 2.5% almost in yesterday's session. This morning we opened firmer, we turned negative, we have headed positive again. So it would appear that there is a little bit more volatility in these markets at this stage, Rob.
Yes, definitely. I think that VIX index moved up to about 18.1%. It was up another 4% on the volatility index. So this shows you that there is a bit of more volatility coming through, uncertainty in the markets. I think there is a little bit of buying coming in at these lower levels. Billiton in the low 200, 210s to 215s. Anglo's below 300 Rand. There is some buying coming back in there. It's not aggressive buying, it's just people just starting to nibble and take some of these resources off the very big move down.
And of course, we have seen resources stocks under pressure the entire week, really since that Australian announcement on the 40% resources tax. In fact, yesterday we had the big resources counters losing close to 5% in some cases. Do you think we're seeing some value in the resources sector at this stage?
I do think there is a little bit of value. You have to take a view on what's going to happen in Europe and what's happening with Greece and the contagion. Also, how strong is that dollar going to get, and are the commodity prices going to come down a little bit as that dollar strengthens over the next few weeks. So you have to take a view on that. But I do think there is a little bit of, on the big miners such as Billiton, it still is the premier miner in the world. And even with tax coming in 2012, it will still be one of the biggest. It will be the biggest player in the market, and there is a little bit of value there. You don't have to go in and buy a full allotment, but you probably should start to take a little bit of stock.
Of course, that selling yesterday seemed to be quite aggressive. Rob, what sort of volumes have we been seeing coming through these markets with all this selling?
Well, yesterday there was a lot of volume through the markets and aggressive selling coming through. And the volume had picked up. I think a day or two before we had only seen 7 billion through the market. As yesterday we were back into the teens, so quite a big move up in the volume coming through. Last week we did have net foreign buyers in South Africa for the bonds as well as equities. We're now to take a look at the end of the week how much of that flow that came in last week has now left our market. But there has been much bigger volume, especially yesterday.
And of course, if we do have bargain hunters coming into the markets, do you think, which sectors do you think they're going to be picking around? And you did mention the resources. Do you think there's value across the markets at these levels?
Well, I think on the gold side, with the gold is still holding firm, even though that dollar is quite strong. People are still looking to get some gold investment coming through, so that gold price is quite strong, and the gold miners are doing very well. We see Anglo Gold will be coming out with their numbers in the next 2 days, so we'll take a look at those numbers quite closely. So one or two of the gold shares, like Anglo Gold, is our pick there. And then obviously the big miners you take a look at, and one or two industrials on the local level that are not too exposed to Europe.
And of course, with the Rand trading around 757 and set to perhaps go a little bit weaker, it is good news for mining shares, and particularly for the gold miners, isn't it?
Yes, definitely. 760 nearly trading. We might even see 767 later today. Much better value for the gold miners. Obviously, it's short-lived, and you have to see how much hedging they've done throughout the year. But will definitely help them, especially the small miners that are geared to the Rand. You'll take a look at those as well.
Of course, the concerns in Europe haven't gone away. This contagion looks set to spread from Greece to some of the other countries, the peripheral countries in Europe. I mean, do you think this is going to remain a factor for our markets in the days and weeks ahead?
Definitely, there's a very big protest going on in Greece. We have to see what happens there and whether they'll take on the austerity package. I think they have no choice whether they should or not take on that austerity package. They have to. And I think after a lot of fighting from local people, eventually that package will go through, and they'll have to just sit by that. But it's very important that it doesn't flow through into Spain. We saw that the bonds have been moving up quite aggressively, and the 89 points on the Portugal on the bond index there, 380 points on the Greece's bonds as well. So it is problematic, and it's if that flows through to the rest of Europe, it is a problem, and we'll see very strong dollar for the next 6 months easily, which will put pressure on commodity prices.
Of course, in the meantime, we have been getting some positive economic data out of the United States and across the globe, really. We've had positive PMI numbers out. We had some positive housing numbers out of the United States yesterday. I mean, what does this tell us about the US economy? And I think we are looking forward to some jobs numbers today, tomorrow, and on Friday.
The US economy is definitely starting to get into gear, and it's starting to turn over slowly. The numbers that have been coming through have now been consistent for 3 or 4 months. Some of the numbers have been improving for 7 to 9 months as well. So it definitely is turning around and looking quite solid for that US economy. The one factor that we're waiting for is unemployment. We saw our unemployment actually weakened last month, and we have to take a look at employment in the States. It still makes up the consumer spending in the States is 70% of their market, and the consumer really has to get going there. So employment is really the factor that's going to keep all of these good underlying fundamentals that we've seen in the market and push them through to a proper recovery. So unemployment numbers this week will be the non-farm payrolls on Friday. We've got jobless claims tomorrow, and we've got the ADP employment data coming out in the States. So we're going to be looking very closely at employment.
Rob, if those employment numbers don't continue improving, if they don't show an improvement, in fact, over the next 3 days, what do you think the prospects are then for the markets? Do you think we could see further pullbacks?
I think we can definitely see further pullbacks if those employment numbers are poor. Europe already is under a lot of pressure, and the selling is coming from there. That underlying buying that's coming in, and the people that are just testing the market with that buying will disappear. And I think we can go down easily another 5 to 10%.